Yesterday, we said the market had decided what stories it wanted to hear. Today, the market got handed a story it couldn't ignore. The April inflation report came in hot, the hottest monthly print in months. And for the first time in this rally, the warning signals we've been tracking actually moved price. The S&P 500 fell 0.2% to 7,400. The Nasdaq dropped 0.7% to 26,088. The Dow gained 56 points, a small move higher. Numbers small in isolation. The story underneath is much bigger. Here's what happened. The Consumer Price Index for April rose 0.6% month over month. That's significantly hotter than expectations. Headline inflation is re-accelerating, not cooling. We've been tracking 5 warning signals across our recaps. Treasury yields rising on risk-off Monday. The Dow transports diverging from records. The S&P 500's RSI above 70. Unit labor costs growing faster than productivity. And the Dow versus Nasdaq divergence on Friday. Today, inflation joined the list. But unlike the others, this one didn't just signal. It moved prices. The damage was concentrated where the rally lived. Yesterday's chip leaders got crushed. Micron, which led markets to records Monday, fell 3.6% today. AMD lost 2%. Qualcomm dropped 11% in a single session. Last month, Qualcomm gained 39%. Today, it gave back nearly a third of that. The blow-off pattern in chip stocks that we've been flagging for 2 weeks just had its first real test. The names that led the way up are leading the way down. Meanwhile, the rotation was textbook. The defensive names rallied. Walmart gained 2%. UnitedHealth added 2%. JPMorgan rose 1.7%. These are the stocks investors buy when they get nervous about growth and want safer cash flows. The fact that they ripped on the same day chips collapsed tells you the rotation isn't just sector noise, it's risk repositioning. Oil ran with the inflation narrative. West Texas Intermediate crude jumped 4% to settle at $102.18. Back above $100 for the first time in a week. The peace trade we declared dead yesterday isn't unwinding back to where it started. Oil prices are rising for a different reason now. Sustained geopolitical risk plus inflation pressure. Both bullish for oil. And in case the data wasn't enough, David Einhorn at the Sohn conference said the quiet part out loud. Quote, "I have thought the market is very highly valued for a few years, honestly. Stocks remain very, very pricey. Sooner or later, I think we'll wind up with a better opportunity." End quote. Famous value investor publicly bearish at record highs is the kind of thing that doesn't move markets on the day. But it shows up in price action when the data starts confirming the thesis. Today's CPI print is exactly that kind of confirmation. So what do you watch from here? 3 things. 1. The Producer Price Index releases tomorrow. If PPI also runs hot, we have 2 inflation prints in 48 hours confirming the same pattern. That's enough to force Fed commentary to shift hawkish whether they want it to or not. 2. Whether chips bounce or extend losses. Qualcomm losing 11% in a session is statistically significant. A bounce tomorrow says today was profit-taking on a hot data day. No bounce or further losses says the chip cycle is breaking. 3. Whether the defensive rotation continues. If Walmart, UnitedHealth, and JPMorgan keep leading, smart money is positioning for slower growth ahead of a hawkish Fed. That's a meaningful shift from what the market has done for 2 months. The warning signals just got real. The question is whether tomorrow's data confirms the pattern or gives the bulls reason to declare today an overreaction. We cover the days the markets actually move, typically a few times a week, more when things get wild. Hit subscribe so you don't miss it. We'll see you next time.